Is this currently the final bottom of the Bitcoin bear market? Or are we just consolidating before we go one level lower? Today we're going to have a deep dive into Bitcoin and we look at it from various angles to map out bullish cases, bearish cases, and keep an objective view on the market. Let's start with a pure price action and see where Bitcoin currently is and if prior consolidation areas can be strong enough to give Bitcoin the support that is needed to substantially bounce from here. As we can see, Bitcoin is currently consolidating at the same levels that we have been in 2024. However, it did the same with this prior consolidation here, and what we have seen was a strong sell-off afterwards. So it can be interpreted as a potential level of support. If this is really going to be the final bottom, remains to be seen. Let's see what Traders 8 is telling us and if we can create a bias from that. What we ideally want to see is Bitcoin forming a green warning dot followed by a green channel, or ideally a green warning dot inside an existing green channel. Given the fact that the week hasn't been closed yet and price can easily fall back to other levels, it remains to be seen in the coming days how that develops. Before Bitcoin fully tops or bottoms, it usually requires a substantial amount of consolidation, which has happened in the previous bull run, which has happened at the top area with this double top in 2021 and 2022. And even here across multiple weeks with a failed attempt to break the highs. So also from that perspective, it remains to be seen and is still more on the neutral side. When we look back in the history of Bitcoin, there's a remarkable correlation between all recent bull runs that I would like to show here using the Fibonacci extension tool. So let's go back a few years in time. Back in November 2011, Bitcoin was forming a local bottom back then somewhere below $2. In April 2013, Bitcoin topped at $266. Was there any way to determine where the following bottom was? So here's the technique how to measure it. We use the Fibonacci extension tool and we put our starting point at the previous bottom of the bear market. If we then draw this whole move and measure it in a 3618 extension, we create a golden pocket, which is between 065 and 0618. What is very remarkable at that point is that after the peak, Bitcoin hit exactly that level to the tick. So this is just one example and doesn't give us like any valuable meaning, except it happens once again. In the bull market afterwards, we use the exact same measurement. Let's use the same technique once again and assume that this here was the local bear market bottom. We use the 3618 extension and try to map an area that Bitcoin needs to hit before it goes further up. While this one was not highly accurate because it touched a point here but then broke through the line here, it still gave us like a good area where a potential bottom can be found. Just bear in mind, this is not hindsight measurement. We need 2 points, which is this one here and the previous bottom of the bear market. That creates the golden pocket here, and we can see that Bitcoin found strong support here. Let's use the same technique again. We take the bear market lows, measure to the bull market highs. So when the retracement started here, we could actually already anticipate where the golden pocket is and where Bitcoin needs to bounce. And once again, during the COVID lows. Interestingly, the same happened again. We take the bear market lows, measure to the bull market highs, and once this retracement is starting, we are already able to anticipate where the golden pocket could give us strong support. And it happened exactly like in the years before. So now we have an hypothesis. We know that when we know the previous bear market lows and the existing bull market highs, technically we could have a repetition of this behavior. So we are already able to mark where Bitcoin could go if history repeats itself. So let's do that together. We take the Fibonacci tool and take the previous bear market lows, anticipating that 126 have been the bull market highs. And what we get is a golden pocket around $35,000. While this seems very far away, we could easily have a situation like this before the market is slowly bleeding lower, giving us the consolidation that we need, that we previously had in other bear market lows. And if that happens, we have a much more interesting risk-reward ratio in terms of getting back into the market. However, this is just an hypothesis. Yes, it happened 4 times in the past, and it could potentially happen again, but this time it can be different. So let's summarize everything objectively. Bitcoin is pretty much in no man's land. We do have very clear reasons that Bitcoin could bounce here. However, it remains a theory and is not confirmed by any means right now. We are in this previous consolidation. Bitcoin would strongly need to break this level here and find support over here, that we can assume that Bitcoin is going further up. However, if Bitcoin is losing these levels and just forms a deviation here and goes back here and breaks to this level, it's easily possible that we see prices going back to the next consolidation range, which almost coincides with the 3618 retracement that we have seen historically happening 4 times already. We remain a neutral perspective until proven otherwise. Just looking at the pure price action, this is nothing else than a downtrend with the potential to consolidate, which we know after price action gives us further clarity. I hope this was insightful and helps you to deal with the market conditions in the best possible way, and I see you at the next one.